We're here at Cybos, and I'm speaking with Francesco Vanni-Darci-Raffi, the head of GTS for Citibank globally. Francesco, nice to be speaking to you.
Nice to see you.
Obviously, the last year has been a very tough one, I think, for everybody, maybe Citi especially. I wonder, could you tell me a little bit, give me a little bit of color on what your last 12 months have been like?
Well, I would say the last 24 months. I remember in Boston on the Monday we announced the first losses. Vienna on Monday, there was the Lehman event. So for the last 2 years it's been very tough in the industry. I would say the perfect storm has hit the financial services industry and also our company. But I think we're at the end of the tunnel and the light is becoming brighter every day. As you know, we went through a major capital raising exercise. Today our Tier 1 is at the higher, on the higher part of the chart. TC also, Tier 1 is 13%, TC is 5.5%. Because of the size of our balance sheet, those are very, very strong capital ratios, which should enable our institutions to absorb any additional shock that comes from these uncertain economic environments. I'll remind you that unemployment is still very, very high. I think Asia has turned the corner. Very strong volumes. Our businesses are doing great, and for our company, when you look at the future, Citicorp, which is the, I say back to the future because it's the name of the holding company of Citibank before the merger with Travelers, all the client businesses are there, and we would like to have a much stronger services business going forward than we have had in the past. And as you know, our services business has been growing quarter after quarter for the last 23 quarters, even during this perfect storm that has hit the financial services industry. How we've continued to hire talent, grow talent, retain talent, promote talent, both inside and from our competitors, invest in technology. We spend a lot of money in technology, and every year we're spending a little bit more.
How is your relationships with banks changing since over the last 12 months, and what do you see sort of you're doing with the banks specifically going forward?
Well, certainly Lehman has redefined counterparty risk, so everybody's a little bit more careful on the type of business you do with bank counterparts, but with any type of counterparts, post-trading infrastructures, non-bank financial institutions, etc. Having said that, our investment in the platforms of the future is really done to serve our banking clients better. And I would say our ambition is to continue the great dialogue that we have with all the best financial institutions from the 104 countries where we have a banking license. We have a fantastic dialogue, a partnership type of approach to the relationship. We say we win when they win, and our ambition is to make them win more with their clients. And if we're the platform that powers that success, normally we're also very happy. And so the dialogue has gone from a transactional, correspondent banking type of relationship to really a strategic relationship. Do I buy or do I make? Do I build a network or do I borrow a network? And today, thanks to the open architecture partnership with Microsoft and all the other big technology companies, we offer a platform with open standards, open architecture that enables a bank to really leverage the scale, the network, the talent, and the functionalities that we have.
Just a final question. First one is on fee income. Could you sort of describe how your fee income has been over the last 12 months or so? And also the investment. You described investment is greater than last year. Sort of, can you characterize that a bit more?
Yes, I mean, every year we spend around $1 billion in technology for maintaining our infrastructure, for upgrading infrastructure, to coming up and meeting all the regulatory standards that are changing very quickly. And the pace is only accelerating in the 104 countries where we operate.
So you're investing more than $1 billion?
We're investing more than $1 billion and more than the previous year. That's the size of investment that a transaction services provider has to have these days to continue to be relevant or more relevant than the competitors, which are also very strong and very good. But nobody has the 104 countries, the talent, the technology, and the client centricity that we have. And as I've told you before, the bank services group is one of the key drivers of growth for transaction services for us in the future.
Okay. And in terms of fee income, what's your what have you been seeing recently?
I think fee income continues to grow as our volumes, transactions, and capabilities enable our clients to win with their clients.
So your volumes are also growing?
Yes.
Okay, thank you, Francesco.
You're most welcome, anytime.